Boom! What's going on, everybody? 360 Digital Closing Bell, our weekly look back podcast here on this gorgeous Friday, October 9th, 2020. We are actually recording this Thursday afternoon, October 8th, 2020. Time actually stands about 5:15 Eastern time zone. I'm doing a little traveling, not for a little business and pleasure. Won't say it's completely a business trip out here. As always, I'm your humble correspondent, Michael Tanner, joined by the purveyor of the show, the director and publisher of the world's greatest website, executive producer of the show, Stuart Turley. How you doing today?
It's a beautiful day in the neighborhood, and man, it's a wild, crazy week.
It's been a wildly busy week, Stu. I think as we go through and kind of walk through each of these days that happen. I mean, if you want to talk about a tweet storm and trading the news, holy smokes, this was an unbelievable week, not just for the equities markets, but also the energy equities markets. A lot of different areas. We're going to cover all that and much more. Stu's got stuff in the international news desk. I mean, Norway is absolutely driving the U.S. oil markets right now. Trump gets coronavirus, but then all of a sudden, oddly gets better. Chevron's doing a bunch of different stuff. First off, they're cutting 25% of Nigerian staff. Now everyone's having to reapply for their own jobs. That'll be interesting. There's some really new, interesting international pipeline stuff. Hess sells a stake for $500 million, and then obviously we'll cover everything that's happening with Hurricane Delta. But first, guys, just subscribe. 360 Digital Closing Bell. iTunes, Spotify, YouTube, the best place for all of your energy finances. Really appreciate it. Give us a review, rate, review, subscribe, do whatever makes the algorithms go nuts. We really appreciate reviews. This show is brought to us by the world's greatest website, oilandgas360.com, which is the place for all of your oil and gas and energy news. I mean, whether it's energy finance, whether it's energy technology, whether it's onshore, offshore, international, oilandgas360.com is the place to go. Highly recommend. Check out the 360 News Deck page, which is a page personally that Stu and I curate every single day to make sure it's the one-stop shop for U.S. E&P news. If you want to know any of the top stories, what happened in the price of oil, what's going on in all the other basins, what's going on with some of the charts, guys, go to our 360 News Desk. You can find it via the homepage, 360 Energy Expert. Hit the drop down and go to 360 News Desk. Bookmark that page, the best place for your E&P news. Stu also runs another podcast called the Energy 360 Podcast, which is one of the best places for energy thought leadership. We've had some great episodes drop recently. We've got some really good ones coming up. What do you have on deck for us?
Well, we've got some that I don't want to confirm yet, but we've got some good ones. So we've got everything from Kremlin Games coming up, which is from Bruce Payne. And we have several more books. We have several really well-known authors. I've got several that are confirming right now, and we've got some CEOs that are confirming.
Yeah, and I think there's some really cool stuff coming down the pipeline. Just apply for everything and check it all out. Energy 360, Apple, iTunes, Spotify, wherever you get your podcast. I mean, this week was wild. I think the best place to start is obviously on Friday when news broke before we all left for our weekend that President Trump not only has contracted coronavirus, but is also going to Walter Reed Hospital. He spent the entire weekend getting treatment, taking actually as well as I love how they call it a cocktail of medications. It makes it sound like he's sipping martinis in the thing. That's literally what the article said. A cocktail of things that, regenerate. I can't even name and I can't even read all the things in here and even pronounce them. So point is, he was on a bunch of different stuff. Monday morning, and not really Monday morning, Sunday night, really before the futures market opens. You got to just love this, Stu. 4 o'clock pit opens Mountain Standard Time. We get a tweet about 3:45 that tomorrow night, guess what, Stu? On Monday, he's going home. And that's exactly what happened. It sent markets actually pretty much roaring on Monday. And he that night did get out of Walter Reed Hospital. Major indices finished at least 1.5% higher. Stimulus, as you'll find, the stimulus talks are going to go up and down this week. On Monday, there was hope that renewed stimulus talks were going to happen because Trump was out of the hospital and now ready to negotiate. House Speaker Nancy Pelosi, Treasury Secretary Steve Mnuchin actually held an hour-long call during the day and discussed the justifications for various numbers and planned to exchange some sort of paper on the terms of what the coronavirus stimulus package will look like. When we turn over to what happened in oil, I mean, the whole week was bullish. If you would just look at a weekly price nice chart. I called it as a neutral week. I was wrong. I mean, price action heavily towards the upside. Prices overnight rose 6%. Again, really off the back of Trump getting better from coronavirus. If someone who is 74, who's overweight, can recover like this from the coronavirus, who the CDC claimed was the biggest, most impacted subset of people, well, that's going to really help with the long-term demand and supply side of the equation, which is, as we talked about on the live show this morning or this afternoon, it's a supply-demand commodity. So when you have something that affects demand and something that affects supplies, that's what moves markets. So really, that's what's helping drive those markets. A 12-month strip was also up 4% that day. So that's really where you can talk about. If you want to know if it's long-term demand or supply, look at that back end of the curve. That back end was up over 12 or 4% that day. Natural gas prices settled about 8.5% higher. Really expecting, as that winter season to move in, storage numbers also came in within normal ranges. People on Monday were preparing for Hurricane Delta. Calfrac also dropped another shareholder letter in response to their Wilkes Brothers thing. We ran that on the news desk Monday. Basically, for those of you just catching up, Calfrac is a Canadian service company. Earlier in the year, filed Chapter 11 bankruptcy as part of their renegotiation and try to emerge from Chapter 11 bankruptcy. One of the options was one of their senior note holders, Wilkes Brothers, wanted to come in for about $18 million in cash, buy out the rest of the equity, assume the debt, and take over the company. Well, Calfrac management obviously doesn't like that for probably a couple reasons. We've speculated on shows why they may not necessarily want this, but they're frankly opposed to this deal. They think it's not good for the shareholder. They think it undervalues the company. Between, just as Stu says, us girls, I just think the management team wants jobs going forward. They know if this Wilkes Brothers team comes and takes over, guess what? Whoop! They're on the chopping block. So maybe they just don't have a good maybe they don't have a good change of power clause in there. That's why you got to call our friends at Prang & Associates. They'll make sure your contracts are airtight on that front. Another big thing that happened was international. I want to bring Stu in. On Mondays when really we saw this Norway stuff really start taking off. Give us kind of an update on and at least maybe what started a lot of this stuff.
You bet. It started out with only about 600 folks, and it just kept escalating on demands from the union and from everyone else. And so the dates now have been extended out past the 14th. And they went from 330,000 barrels a day, they're up to 900,000 barrels a day in lost production. That's pretty crazy. So it has started to escalate, and I don't know the extent. It may shut the whole field down.
And as you mentioned, I think you mentioned it on the show, it was Monday or Tuesday, we're talking oil's $39 and we're striking for more money. I mean, I'm all in favor of the individual taking power when necessary, because trust me, Stu, I've been on both sides of the equation. Corporations will cut you the moment it makes sense for their bottom line, and even sometimes a moment sooner. So if you are an employee, any opportunity you have to take some of that power away from your employer, I applaud people for doing that, and you should use your employee rights to your advantage, because your employer will lay you off the moment it's convenient for the bottom line. But this story doesn't make sense.
No, and so if there are things that we're not aware of with health, with things that the company is not taking care of, strike is definitely worthwhile. But with as many people getting laid off in the oil field, there was a number thrown around like 700,000 folks. I got to fact check that number. It's hideous how many people.
I think it was 191,000 jobs, that may have been, there was some 100, and this is where we're just pulling numbers out of our head here, but I remember running an article, Stu, that was something like the PPP that was applied to Texas saved about 200,000 jobs.
Right.
So that your number doesn't sound too far off.
So yeah, it's our heart goes out to all those folks that are out there. Okay.
And we also chatted, on Monday. I'd highly recommend going and watching the Daily Show, but there was some ESG MiFID II regulations that are rolling
Oh,
over
yeah.
into, and I think, when you talk about ESG regulations moving over from, Europe to the United States, Stu brought this up. I don't know if it was in a pre-show that we talked about before, one of our live daily shows or before. It's the standardized reporting of these ESG numbers, which is a huge hiccup. And I guess give us an overview of what MiFID II is, because that's what's coming over. These ESG regulations are falling under what's called MiFID II, and that's coming our way.
MiFID II was about 4 or 5 years ago, and probably about 3 years ago, it really hit the US. And so there's really not a board or agency out there. There's about 4 in the US. Everybody's trying to figure out, how do you measure ESG from your peers? And so the MiFID II is looking at incorporating all that in the financial, social, in theirs. So their sustainability policies and everything else. The United States got hit by the MiFID and the financial regulations of the EU. The EU is now setting out that the regulations are going to be, investors want more information, how companies are managing their ESG related opportunities and risks. We just launched our ESG dashboard. We are also taking a look at all of that. But the number one problem, Michael, is the simple fact that nobody is counting ESG the same way. So you cannot regard financial decisions or investment decisions on your peers without having the ESG. It is coming. It is a story we'll be covering. Also on Monday, we had, Turkey had a wild story here, right? They doubled the size of their drilling rig fleet. They bought a second one.
That's pretty nuts. You're gonna love this. So I'm watching CNBC right now. I don't mean to completely shift. They've got Paul Sankey on, who is one of Sankey Research, who's an oil and gas guy. He just came out with a research report this morning that talks about why Exxon and Chevron should merge. Interesting. Initial thoughts. What do you think?
Why are 2 bad decisions going to get worse?
Yeah, well, I think what it sounds like from his angle is that, one, clearly ExxonMobil, which at one point was 4 times bigger than Chevron, as of beginning of the year was 2 times bigger than Chevron. Now we're about 130 billion in market cap. One of them, as in Chevron, has a much better PR standpoint when it comes to ESG than ExxonMobil does.
Right.
And merging those two can kind of drop, in his opinion, can drop that subset, can create a company with a tremendous balance sheet. Are all those things true? Yes. My question is this, and not to pivot. Does Trump even approve that? Trump is one of the more anti big merger, conservative presidents that we've ever had.
We're talking Chevron and Exxon, right?
Merging.
Right. Here's the problem. Exxon and BP have taken the most, okay, it's this hand right here, the left-hand turn. They've gone this way and they've gone green. Chevron has got a better balance sheet, and you and I went through the numbers on the balance sheet on Chevron's thing. They are going less into renewables. They have a better program. So the management at Chevron are better at the overall energy markets. So if whoever's going to end up on the bottom one, if I'm an investor, I'm going to take a look at who's leading that one. It's curious how you phrase that, and something to look at.
Yeah, I mean, I have zero chance this happens. I just find it interesting. They got to figure out something to talk about on CNBC when it comes to energy markets. Let's just bring on someone to talk about the merger of Exxon and Chevron. Yeah, I don't think that really gets approved by Trump. Coming back to ESG regulations, part of why Exxon has this problem is because they're perceived in the marketplace, right or wrong, as having an ESG PR problem. So all of this stuff, like you mentioned, Method 2 rolling over from here, it's going to have a wild effect. When we roll into Tuesday, this is when we start getting on what I call the tweet trains. So on Monday, we heard, yes, stock outlook looks good. On Tuesday, Trump comes out and tweets, not just says, and this is what's fun, it's not just tweeting, okay? It's not just tweeting. It's not just coming out with a statement. He's tweeting this, Stu. He's tweeting that he's calling off stimulus talks. Text the market in the last couple of segments. I mean, Dow Jones was trading about 200 points up before the tweet. Dow Jones finishes 375 points lower, or about 1.3 percentage points. Talk about an unbelievable swing. And that's off some tweets. Now, he did say, he's going to wait till after the election to do that. It wasn't that he's not engaging in them. He just wants to wait till after the election. But as we roll through the next couple of days, it was kind of all of a scam. Crude oil prices do begin to spike a little bit. Again, this is off the back of Hurricane Delta beginning to take a little more production offline, but also off the back of an expected, what was going to be a draw of crude oil. The API came out and expected a draw of crude oil. So that, again, drove markets up a little bit. When we look at some of the shale news that happened first, U.S. Treasury actually came out and blocked PDVSA's takeover of Citgo. This is something that we were on early on with PDVSA. They were doing around 1.9 million barrels of oil, being the Venezuelan national company, down to about 300,000 barrels. And Citgo was one of pretty much their only money makers at this point. It's a Houston refinery. How we ever allowed the Venezuelan government to purchase something in the United States is beyond me, Stu. For whatever reason, they have a working interest in Citgo. That is no more, at least until January 20th, when they can reevaluate. They've blocked their takeover of Citgo. I applaud this. Great job.
Citgo actually started in Tulsa and as Citico, and then it was bought by the Venezuelans years and years ago.
Really?
That's how Citgo got its start.
Citgo. Well, hopefully it's Venezuelan no more, or at least hopefully they're involved with it no more. Stu, what happened on the international news desk Tuesday?
Tuesday, let me get there. The new gas line on the 6th out of Moscow, Azerbaijan ties with Russia has already been strained. And I ran a story this morning. There is a serious war going on in this one. This morning, I had a story that I went out, and here's why that war is actually going to start being an issue. Of the 14 countries get more than 50% of their gas from Russia. So when you take a look at this is on the Oil and Gas 360 website right now. And if you look at all the pipelines coming across Russia, there are almost all of Europe, 50%, 14 countries get their natural gas from Russia. He turned those spigots off 4 years ago. He's threatened to do it again. And now I talked to folks over there at some of the natural gas pipeline. They can make gas for almost nothing. It's kind of like Saudi
really
Arabia.
Unbelievable the economies of scale some of these international companies have.
And so I put out there on this, follow the money. And it's all about why this is a real interest. Oil and gas is 30% of the Russian GDP. Think about that.
30%?
30%. He is fighting for the Nord Stream 2 pipeline, which is part of that story in Azerbaijan and the war going on. We've got another Nord Stream story this week as well, too. All of this is blended in this week, just out of that Tuesday story. So it's all on the news desk and all right there.
Yeah, it's really unbelievable, some of these changing oil dynamics. Biggest thing, when we look, oh, sorry, go ahead, Stu.
On Tuesday, this was a big one. I ran a story on Saudi Arabia. Is the sole survivor? This is right in line with our conversation with
Yeah.
BP, Shell, Chevron, and I truly think that Saudi Arabia will take 50 years to go green. Saudi Arabia's oil with Saudi Aramco is the cleanest in the world. Saudi Aramco has 20% of the proven world reserves. They can manufacture oil at $4 a barrel. They got a long way to go. So here is Saudi Aramco. Here is Shell, Chevron, BP. They're going green. They're going green and going the other way. Saudi Aramco has got a plan now to sit here till 2040 and be the only supplier out there.
Well, we were talking about very cheap oil or natural gas in Russia. What's the number for Saudi Aramco?
$4. They make money. They make money anything above $4. 30 cents. 30 cents is what Russia has in natural gas. 30 cents.
Oh my goodness. 30-cent natural gas, $4 oil. Talk about you could holy smokes.
Do you know why Russia and OPEC wanted the US out of the shale business? So they can control those 2 points. Okay.
It really is unbelievable. Anything else for Tuesday? I mean, Tuesday was busy.
Chevron and Nigeria cut out 25% of its staff in Nigeria.
At least they don't have to reapply for their job.
Then that was today.
But yeah, we'll come to that. At least they don't have to reapply for their job. No, our hearts go out to that. When we dive into Wednesday, big thing that happened, especially on the equity markets, was another tweet storm by President Trump. I'm telling you, if you guys can't keep track of this, neither can I, because I promise you this is unbelievable. First, he tweets, really what he tweets out is that if he has set targeted stimulus bills, aka $1,200 checks he would sign, is stimulus specifically from the PPE program, which really helped the XOP contract. Because as we covered, if you're a small privately E&P company, the PPP program was crucial for you, crucial to stay online. So, whenever we talk about the payment protection program and whenever there's news that could increase, that's going to drive specifically that XOP contract up. We saw all major indices up about 2 percentage points. S&P was 1.8, NASDAQ was 1.9. Dow Jones actually was that 2%. But part of the reason why it's kind of funny, XOP contract rises on Wednesdays to about 4 percentage points off the back of the PPE news. Crude oil prices, off the back of 80% Gulf of Mexico production shut off, 1.4 million barrels, and a slight build in crude oil. We were expecting a draw. There was a build, drops to 39.94. We talked about the twilight zone in terms of President Trump tweeting that's moving the markets. Now all of a sudden 1.4 million barrels gets ripped off the market, but traders react more heavily to 500,000 barrel build in U.S. commercial crude oil inventories. I don't get it, Stu. And you theoretically pay me to talk about this stuff. I can't put it together.
I have no clue, man. You're the adult in the room. I don't get it.
That's scary. So I mentioned this on the show on Wednesday. If you are trading crude oil, don't. That's my first recommendation. Just don't. But if you do, be very, very careful what news events you get yourself into, because the changing oil dynamics and a lot of the news that is really driving these markets is changing left and right. I think the other big thing that happened on Wednesday was Chevron did dive, speaking of Chevron and their push to become more renewable, they've actually dove in and they have a joint venture to do biomethane with Crestmark Resources. Stu, do you have a little more info on that?
You bet. I got it right here. Chevron will purchase the renewable natural gas product from the JV's project, which is out of a dairy biomethane fuel. And so AOC's happy. She's going to get some cow methane done. It's going to go into liquid natural gas for cars or trucks. So now this is on the second part of one that they just did last month in a successful production from dairy farms in Kern County. So pretty interesting. Renewable from cows.
Yeah, but it's also there's landfills. There's some other, and we're actually going to bring on the Daily Show Monday. This is why you got to listen to the show. You get some inside baseball. Dan Genovese, director of consulting over at Intercom, is coming on the show Monday to talk specifically about renewable natural gas. Some of the interesting stuff. I know he's actually working with a company who's engaging with Williams. So there's so much interesting stuff that's going on here in terms of both biomethane and what you're talking about. Do I think this is going to change the world? No. Do I think there's a potential to have it become a player in the total energy game? I think so, of course.
Economics, Michael. It's all about getting the lowest kilowatt per hour to the people, and I think.
Well, yes and no. Yes, and to a point, you are correct, but there is a point at which the emissions can be so much greater, and what we would call the social cost of carbon can get to the point where it is above. So I don't want to blanket agree with you, but you are mostly correct.
I have mostly correct, but I have that paragraph as say that little comment at the end and say, as long as we're good stewards of the planet, you got to do it right. Now, that being said, I applaud Chevron and everybody for the bio. So,
no, I think
I don't think it's going to be a big part, Michael, until it's economically feasible.
Yeah, no, and we will see. I think it kind of brings us to technically today. If you're listening to this, it's going to be yesterday. Really a mixed day. Talk about for the markets. We were up and down all week. Tweets, comments, left, right, stimulus, no stimulus. House Speaker Nancy Pelosi came out on Thursday morning and along with President Trump, and gave what I would call even more conflicting statements. Trump markets actually were basically a range-bound day. Dow Jones closed 190 points low or higher. SPY was basically 0.8 percentage points. Pelosi came out and said there's told reporters there's, quote, no standalone bill for the airlines. It needs to be a full package, something that President Trump pushed for earlier. Earlier in that day, though, before that statement, Trump came out and said that contrary to his tweets on Tuesday, they're starting to have some very productive talks with the Democrats. So if you want to know where stimulus talks stand, I don't know. I really don't know, because we just have to follow the Trump Twitter phrase, because it really is unbelievable. We move over into the oil and gas segment. Crude oil prices were up today, mostly because of a lot of long-term supply side issues. This stuff fallout from Norway. Looks like there could be 900,000 barrels be taken off the market fairly permanently, at least for the next 3 to 6 months. We saw 12-month strip for today or for Thursday, which is today. I don't care. People can know when I'm recording this. I could care less. It was 2.5 percentage points. And so unbelievable in terms of just, you want to talk about international news stories affecting crude oil and natural gas markets. Part of the reason why we saw an update, natural gas finished up, that front month contract finished up about a percentage point. Again, there's a little more than expected LNG going to be pulled off due to Hurricane Delta, which is supposed to hit landfall October 9th, which is going to be Friday, when when everyone's going to be listening to this. Well, not everybody, but you're listening to this today. So when it makes landfall, it'll be a Cat 2. Currently, it's a Cat 3 right now. So as it falls out right now, we will see how all of that plays out. Another thing that happened this morning, so it was pretty funny. Chevron is making every one of their employees reapply for their own jobs. Yikes. If you were to reapply for your job, would you get it?
No, nobody had hired me. The other thing is also, they are also saying you've got to reapply for jobs in the green area. And so here's the Chevron saying you got to reapply for a job, but they're saying, oh, by the way, if you want to somebody that doesn't know anything about solar panels gets to apply for that job in solar panels. So I thought that was a little.
Yeah, I think it'll be really interesting how those two things, I think a lot of this has to do with the redundancies of the acquisition of Noble. If you're a Noble employee, all of a sudden having to hear now you have to reapply for your new position at Chevron, you know what that means. Axe. Because the easiest thing to do to save costs in a merger is cut that G&A.
Right. There's a bunch, though, that are in the Leviathan field that won't get cut. I can guarantee that.
No, there is some good stuff, like you mentioned. There are some fields that will get cut for sure. So it's absolutely unbelievable, and we'll be making sure to cover that. Some crazy international stories, though. First off, NextEra Green Energy is now bigger and more valuable than Exxon and Chevron. Talk to me a little bit about that.
You take a look at NextEra, they are at about 145 billion. Then you have Exxon at 144 billion, and then you have Chevron at 143 billion. Mm-hmm. So what's a few billion between friends?
It is a couple billion between friends, no kidding.
And quite honestly, I think NextEra is one of the reasons that BP, Shell, and all the majors are taking such a left-hand turn, and Saudi Aramco is going to stay the course. So I think they're really looking at what NextEra has done. We just got a report in that I thought was pretty interesting. I'm going to try to get this person who is a senior fellow at one of the institutes. He had some very interesting points, and by 2040, the amount of pollution that the wind farms are going to have, those numbers are staggering. It's going to be 3 times more than all of the plastic bottles in the ocean is going to be pollution from the wind farms. There's some stats that we are going to go interview this guy on that are mind-boggling.
Yeah, wind farms specifically, I have no problem calling scams. I think wind farms are absolute scams. I think solar has a place. I don't think it's a huge place, but I think there's an interesting, there's a way you can make solar, I think, be a part of it. From hydro, I'm a fan of. Nuclear, I'm a fan of. Wind for me is lowest on the totem pole, and personally, I think it's a scam.
I would agree. Now, the only wind that I would really stand behind, and I've got some wind folks I'm trying to get nailed down, is the new ship that was just released out of Norway. They've got the pilot program, and it's a sailing ship that holds 7,000 cars. It's supposed to be in production here in 24. That I think is pretty darn cool. It is a beautiful metal sailed ship, and I think it'll be great. So
it'll be very interesting.
Everything we're going to talk to Dan about on Monday. So I'm sorry.
We're going to have to talk with Dan about it on Monday, because it's really going to it's going to cause a lot of different stuff. So are we missing anything that happened on the news desk this week?
Yes.
What are we missing?
The EIA came out this morning and said, November, you're going to see your $3.30 natural gas. I got to have that up on the news desk tomorrow. EIA.
Yeah, the EIA, we'll have to just dive into all that report. I would say all that and a bag of nuts. But I think it's time we go ahead and move over into the levels for crude oil before we finish up this podcast. But as always, guys, this segment is sponsored by Sansone Capital Group. These guys do great research, guys. Just give them a call, 949-561-1818. You go and call them directly, 303-907-6825. Check them out, sansonecg.com. Tell them you heard of us because of the pod. You came to us because of the podcast. We appreciate you calling them, but please, guys, got to tell them the podcast team. It's the only way it's the only way we make money over here is if you refer our sponsors and you say it's the only way it helps. I And the levels this week were pretty interesting, Stu. I mean, I predicted on the show, if anyone, loyal followers of the show will know, I completely blew this week's prediction. I thought it was going to be more of a range-bound week between 37 and 40. Well, guess what? We saw price action continue to just increase all day. We started, week trading about $37 even. I mean, we're at 41.27. If you look at a chart right now, point of controls move up each day. Love a couple different levels here. I think 37.06, I think you still have to keep as a ceiling. We've proven, or as a floor, excuse me, we've proven we can get down and touch that. 37.48 is a good level. I think there's a big vacuum space between that level, 37.48 and 38.72, which we saw really slip to off some of this rising supply information. Point of control for the week is 39.52. So if you're interested in, if you think there's a more bullish case for oil next week, I don't know. So this is where interesting. I've been wrong the past couple of weeks on where oil's going. So it'll be interesting to see Monday where my bias leads us. I like 40.25 as a level. I think 40.26 as a level is good. Right now we're trading about 41.19. There's a nice hard cap at 41.36 that goes all the way back to about 4 weeks ago. So it'll be interesting to see what happens. I can't tell you if I have no idea if there's any bullish news that's going to come. I don't think there's going to be any that drops, but who knows? I think these markets are moving, and I think the key, pay attention to if you're trying to, whether you're trading at home crude oil, you're trading ES, you're trading NQ, you're just trying to figure out maybe where these markets are going. It's news driven right now. I mean, fundamentals have never mattered less, and that's, as somebody who looks at fundamental numbers all day, it just kills me, because none of this has anything to do with. I mean, Stu, seriously, when the fundamentals, you have an MBA. When have the fundamentals? When have we cared about them less when it comes to trading?
It started a little while ago. Who would have guessed that Iranians would steal 3 ships and the oil price wouldn't even burp? It's hard to even describe.
It really is hard to describe, and to be honest with you, I'm not going to try to figure it out, because I think there's just the changing U.S. oil dynamics. Sit in on a chat room if you're going to trade this stuff. We covered the levels for DOE. As we remember, we saw 500,000. We saw a 300,000 barrel increase in crude oil production. But remember, we're about to see a 1.1 million barrel increase drop off, or about 1.6 fall off next week when we do our average. So it'll be very interesting to see what the EIA numbers look like. Natural gas inventories came out 75 billion cubic feet. So we're seeing that number draw down a little bit. Like to see that come down a little bit. Like I said, we want to begin to draw some of these natural gas stocks. And again, that's what happens to the price of natural gas. So are we missing anything else? It was a busy week. I think we did a good job of walking through this show and walking through this week. Man, there's a lot of stories. We ran really interesting fact from on the news desk today about private equity backed companies got absolutely slashed. Talk about capital not being available.
Yep. No ESG, no access to capital. It's one of our things. We did launch
and that has nothing to do. Even if you think ESG is a scam, which it's not, but even if you think ESG is a scam, you have to think about it, because it's the only way you're going to get cash nowadays.
The investors and the consumers, those are the two people that control the money. They are demanding ESG. We launched our ESG dashboard this week. We launched all of our other dashboards this week as well, Michael. So we've had a very successful, busy week. If you go to the oil and gas 360 dashboards, we have DOE natural gas, we have rig count worldwide, we have U.S. production, and we have worldwide production, and we have ESG, and we got more coming.
We got a lot more coming, and what's cool is we're gonna have all of this data available. If you are interested in some of this back end data, email us. Like, I'm not saying we're gonna give it to you for free, but we're gonna do our best to get you guys, whether you're an investor, an analyst, an engineer, whatever data you want, we're going to do our best to give it to you. If we have a dashboard, great, subscribe. If we don't have a dashboard, email us. There's always something we can do. You're staring at the architect at these databases, and you're staring at the guy who hounds the architect every day. Hey, how's my dashboards? How's my dashboards going? So if you, for all things dashboards, if you want more, just get in contact with me. We and Stu are really easy to find. They look really good though. I'm going to toot my own horn a little bit.
Call me your mother.
What?
You just call me your mother.
I did not know. I said I'm going to toot my own horn a little bit.
Oh no, I thought you. Okay, I thought you were saying when you were like.
Oh, no. I'm going to toot my own horn and say these dashboards are pretty good. I'd highly recommend checking them out. It's probably the best $60 you're going to spend on a monthly basis. We give myself the golf clap. You know, I think we have an interesting podcast Monday, Stu. We got a lot of stuff to cover. I want to dive into some of this renewable natural gas stuff. I think we need to dive into some of these cycles that we're seeing in oil and gas. I think I kind of see a shift in some of the cycles that we're working at. I'd love to go back and there's some interesting global inventory numbers that I'd love to pull. And we've got some big topics that we need to kind of dive into, some meatier that we need to dive into more in more of a meat session, I'd say, on Monday.
Oh, I agree. And I'm hopeful some of my sources come through for me so we can have some, you got it here first early in the week.
Yeah, and even if you don't get it here first, you're getting it in the most fun format. So that's about all it goes. But with that, guys, I think we're going to go and get out of here and let you finish off your day. Step one of a two-step hall pass process for Stuart Turley. I'm Michael Tanner. Go ahead and cue the music. We will be coming at you this afternoon for the digital ticker to end up and give yourself your hall pass. And you can check us out for our week ahead podcast on the world's greatest website, oilandgas360.com. Until next time, guys.